Beautiful human. So I'm into my 6th year trading, and easily the biggest influence that anybody's had on my trading has been Stacey Burke. And I got first introduced to his concepts maybe 3.5, 4 years ago. And for me, the thing that I was attracted to the most was the fact that it was how to trade the explosive moves, how to get into the market, how to get into markets that don't come back, how to time your entry so that you're in the explosion and you can actually size up your position. And of course, on paper, it sounds perfect, and his concepts are absolutely brilliant. But for me, I struggled for years to grasp them, or at least to execute them. Having them in my head logically, I could understand them maybe, let's say, after 6 months, a year, conceptualize them, you could say. But actually executing took me about 3 years. So I want to break down his concepts in the way that I'm now framing them, or the parts that I'm looking at or focusing on to actually trade now. So I had an amazing month. Whoopsie daisies. This month, 13%. And apart from this trade here, everything else has been using Stacey's concepts. So, and I know that there's an amazing community that he's built. And just reading the comments, I can see that a lot of people are struggling, let's say, because his concepts are golden. Like, I think it's genuinely, like, God bless the day that he popped up on my YouTube algorithm, or my YouTube home screen, and just forever grateful for this man, because yeah, these concepts are just, it's just, in my, from my perspective, the perfect way to trade. And again, perfect's a very dangerous word. But anyways, enough jabbering. Let's jump into it. So I want to focus on 3 areas here. So the bias, levels, and entry. So primarily the bottom two here. So I've made a couple of videos, and Stacey's got a bunch of videos on the day count. But basically what I'm looking for when it comes to the day count is, let's go on the daily here. So everything starts with the bias, and again, bias can be a very tricky one. So we want to be careful not to have too much of a bias. But basically what I'm looking for when it comes to my bias is I go onto the daily, and then I'm just looking at the day count. So in terms of Stacey's concepts, day 1, day 2, day 3. So 3 days where price has taken out the previous high in a row. So day 1, day 2, day 3. After day 3, so once price has taken out yesterday's high once, twice, 3 times, so this we're on day 3. Once we've done that, we can either then get a reversal and have day 1, 2, 3 short, or we get a reset and then we continue for another cycle in that direction. So here we can see day 1, so don't counter trade day 1, all in behavior, day 2, day 3. Once we're here, I don't know, are we going to continue on for another full cycle, or are we going to reverse? So what I'm looking at is, 1, the day count, and then also the liquidity. So which liquidity have we taken recently? Until this day trades, we don't actually know whether we're going to continue the day count or not. And just what I will say is, if we have day 1, day 2, day 3, and then we carry on for another day, so day 4 becomes day 2. So day 1, day 2, day 3, day 4, so this becomes day 2, day 3. So just to make that clear. So you have day 1, day 2, better without the dots. So you got day 1, day 2, day 3. If we get day 4, this actually becomes day 2. So it's continuing up on the cycle, and after that is day 3. So this would be day 1, day 2, day 3, day 4, day 5. So if you get 5 days up in a row, that's actually 2 full daily cycles. So we have day 1, day 2, day 3, day 4, day 5. So that's completing the second cycle. And then what I'm looking at then, so then we've completed the cycle. So then I'm looking at, okay, where is the liquidity? So we've taken liquidity on the top side, completed a full cycle. This daily candle then closes down. So I'm really looking at where is the daily candle closing? So one, the day count, but also where is the body of the candle closing and which liquidity have we recently taken? So we've just completed a day count cycle. So I'm anticipating this next candle to be a sell day. We go short and we close below. The next day, although the candle closes, the body closes inside this range, we've taken the liquidity from the top side. So where's the liquidity? On the downside. So you're anticipating a sell day. And we get day short. So again, I don't want to touch on this too much today. I really want to focus on the entries because I think the day count's simple, or simple at least in principle. But I want to do a full-on case study of the recent trades that I've taken. So bias, day count, and recent liquidity. Then when we're coming to, Stacey talks about levels all the time, like everything is at a level. And then we have our entry. So the levels are where we're actually looking to enter price at. So for me, these levels are previous session highs and lows, previous days highs and lows, previous sessions order blocks, or inner range liquidity. You could go a step further and add in double zeros, etc. But primarily, these are what I'm looking at. And if double zeros are there, then it's just like an extra confluence. You can just, like, if you're going to risk 1%, risk 1.5. So when it comes to the levels, these are the areas that create the box. So when Stacey talks about the box is the matrix. We don't want to be trading inside the box. For me, I realized this was my biggest issue. Because everything is a box. Like, we have highs and lows absolutely everywhere. So when we're in New York here, this is a box here. As we come into the session, we're in this box between this low and this high here. Everything is a box, and you can go down on different time frames and just find unlimited boxes. So for me, I really struggled with, okay, yes, I know I need to be trading outside the box, but how do I know which box to use? So for me, I narrowed it down to these three. So ideally, we would want a previous day's high and low or a previous session high and low. These are the best two, of course, a weekly as well. And then the next best then is a previous session order block or inner range liquidity. So this is the least valid of the three. And what I will say is these are useful, let's say, on a day two. So we've had day one, all in behavior, so price. So we were consolidating. This is level 3, and then we get level 1 behavior, so it's all in. The chances of us coming down and taking out the previous day's low are very low, and maybe even the session low, because let's say the explosion happened at the beginning of New York. So let's say this is New York, this whole thing here. So after a level 1, if we're waiting for a previous day or a previous session high or low to take a trade, that means we need to wait for price to come the whole way down to here. And because we've just had level 1 all-in behavior, that's very unlikely. So in that case, after a level 1, we can use a previous session order block. So then that would be here. So then we say this is now our matrix box. We're not taking a trade until price comes down to this area. Now that we have our level, so we have our bias from the day count. We now have our level marked here. Now what we're looking for is the entry, and it's simply just looking for coiled volume, so a consolidation at the level. So for price to come down and start to squeeze. Or we're looking for an aggressive move to that level. So for price to potentially be like petering along here and then a big aggressive move down to this level. So it can be either one. We can have the consolidation here and then price breaks out to the level, or we can break down to the level and then coil. So we want one or two of, either or of these behaviors. Either of these behaviors. There we go. And for me, the most important thing is it has to make sense, or it has to be at the beginning of a new 15-minute candle. So Stacey called this time compression. So literally, I will not take a trade unless we have a 1 minute break of structure at the beginning or the end of a new 15-minute candle. So as price is coming down here, just say we're like 10 minutes into the candle, into the most recent 15-minute candle. If we pierce this and break structure, I'm not looking to take that trade. I'm only taking it 2 minutes plus or minus around the 15-minute candle. And this, for me, having that rule has helped dramatically, like so much. It's saved my ass a million times, and it's given me so much confidence in my actual entries. So the more that we can focus on this, just trading at the beginning of the 15-minute candles, the much better results will be, but not very good English. Honestly, this has been huge. And once you start to do this, once you start to only trade at the turnovers of the new candles, you'll start to see the 15-minute expansions, the hourly expansions, and everything just makes sense. Like, it's just, I use the word lightly, but it becomes obvious what the move is just by waiting for the new 15-minute candle. So I'm going to jump into the actual trades that I've taken now and stop blabbering so we can actually go in and see them. So basically, we have our day count, so we can see day 1, day 2, day 3. What I will say as well is this behavior here. So we have, once we're at day 3, what I'm looking at, and sometimes on, again, everything's fractal, so this could be on level 2 as well, but I'm really looking at, okay, what's the consolidation? Which box are we currently trading in? So we put in a high and then we put in a low. Once we've put in a high and put in a low, what we'll then do is create peak formations inside of that range. Those will then be used as points of reference. So they'll either be the launch pad. So this is the launch pad for this trade. Or then most recently today, you can see you have a peak from, so high and the low, have the range. We then put in the peak formation inside on both sides. That will then get traded into. So we have the range here. Price blows off level 3 behavior on the 1 minute for beautiful trade down. Again, this is day 4. So we have day 1, day 2, day 3. Day 4 becomes day 2. Remember, day 1, day 2, day 3, day 4. So it's actually day 2 and then day 3. So this is a full completion of the cycle for high of the week to low of the day trade. So these two, so trades began here. Where do we start? Okay, here, yeah. So I'm going to talk through the trades that I've taken. Again, just using Stacey Burke's concepts and how I was able to take these trades with pretty much zero heat. Like, this has been the most, you'd say, enjoyable trading month I've had in a very long time. And it's because of this man, because of these concepts. So how do I do replay? Oh, there we go. So let's drop down to the 5 minute initially. So as Stacey says, we want to take trades, the Irish should be coming out. We want to take trades that are on level 3. And level 3 in as many ways as possible. And what I mean by that is we have 3 sessions. So we have Asia, London, New York. we have level 1 behavior, level 2 behavior, level 3 behavior. Let's look at how many points this go up. Do we also have a... Okay, so we have even more. We have 4 numbers boxes. So we have 3 sessions, 3 pushes, 1 push, 2 push, 1, 2, 3. 3 numbers boxes, and then we put in the peak formation outside the numbers box. So we went up 75, so 25, 25, 25. So we have 25, 25, and then 25 points brings us to the double zeros. And then we look for trades 25 to 10 to 25 points outside of the double zeros, outside of the range. So we put in the peak formation outside of the range. And the important thing is then, when did this happen? So we know we're on level 3. So we have the pump up. So as we come here, we know we're on level 2. And as we came into the session, we have double zeros above us. So now what we're waiting for is level 3 behavior in and around the double zeros. So we want to see a break of structure on a new 15-minute candle. That's literally what we're looking for. So I was going to say something else, but yeah, that's it. So the simplicity is the important part for me, that it genuinely is, once we have our bias, we kind of want to just forget about that. That's just a thesis. Then for me, what I want to do is sit present at the screen and just see what prints. And as woo as it might sound, we have our bodies and they are our internal guidance system. If we have simple rules and we know what those rules are, and then we also layer on top of the fact that we take care of our nervous system, we've done some form of either exercise or breath work or meditation before the session, so we're actually in a present state, our body will tell us when the move is, as long as it fits the rules. So we have to have our rules. They're black and white, like these candles. The rules are black and white. We want to wait for a break of structure at a level at the beginning of a new 15-minute candle. That's the rules for entry. That can give us multiple entry points, but again, our body will tell us when the right trade is. I know that might sound a little bit woo-woo, but really for me, that's also played a huge factor in it. It's been sitting in a present state and just not being this crackhead that's just hopping in and out of trades, just bouncing around the place and just a complete mess. And whether that means that you need to take a break or it means, probably it's just a break, honestly. Like if you're entering multiple trades, like a shitload of trades, just take a break, give yourself some time to emotionally regulate, come back with a clear head, make sure you hit some kind of either exercise, breathwork, or meditation before every session, and have your bias, and then just sit there present. Have your simple rules and just wait for price to print, because it will tell you what it's going to do. So here we have this pump up, and in here I actually had a break-even trade. So we entered, I don't remember where it is now, but entered somewhere in this level 3 behavior, and I realized that I didn't have my DXY confluence. So basically, the last thing that I will say is I have my simple rules, and then I also, if I'm trading a currency that correlates with the DXY, either positively or negatively, a huge thing that's kept me safe has been only trading once the DXY has also had the same break of structure. So if we're looking to take a Stacey entry, so a 1 minute break of structure at a level at the beginning of a new 15-minute candle, what's increased my win rate from like 60 something to the high 70s has been having the DXY also printing the same thing. So I entered here somewhere, realized that I didn't have that DXY confluence, and just closed the trade, and that saved me here. And then I actually took this trade twice. So I entered the first one. Let me see. So once we pumped up, so I had there we go. So at the beginning of the new hour, break of structure. As we pulled back here, I entered. So DXY confluence, break of structure, new 15-minute candle. And I have here a 15-minute day count. What I mean by that is, whoopsie daisies. The same principle with the days. We have day 1, day 2, day 3. Day 4 becomes day 2, day 3. Day 1, day 2, day 3. Day 2, day 3. So each one of these, this is the 1 minute chart. Each one of these is actually a 15-minute bar. So it's just, again, don't want to add complexity to your trading, but the same principle applies. It's not just with the days. It's a phenomenon in the market that price will, I guess, yeah, it's a phenomenon of the universe. Like, what does Tesla say? If you think in 369s, you'll, I don't know the quote, but for whatever reason, the market moves in these threes. And whether it's on the days, the hours, the levels, the 15-minute bars, this principle of 3 applies. And yeah, it really does give me a lot of security when, whoopsie daisies, when I see it. So yeah, just beautiful trade. At the double zeros, beat formation. Yeah. Sorry, I understand what's happened now. So this was this trade here. So yeah. So I entered here, realized I didn't have the DXY confluence, closed the trade, and then took this trade short. So we have 41, 42, 43, 44, 45. There we go. So this is the beginning of the new 15-minute candle. There we go. This marks the new 15-minute candle. We've just broken structure. Oopsie daisies. So entered, and my take profit is currently always a measure of the range. So Stacey talks a lot about this, using range expansions. So what I do is I measure the last push up before we had the break of structure, and I use the bodies. So I'd measure the top of this candle to the bottom of this candle. There you go. And then they would always line up with some form of liquidity or an order block, etc. But what I use is just the range expansion. So you can see there, beautiful. Again, here it was picture perfect. Here, very early. But I don't care, like the mechanicalness and the stress-freeness of this whole trading session, and just this whole, these past few weeks has just been just amazing. It's completely different to how I was trading before, which was profitable, but just not stress-free. I don't know if it's Stacey. I think Stacey says, yeah, stress-free trading. And yeah, like it really has been pretty much stress-free. Again, I said that lightly because trading is fucking stressful. But yeah, here again, price pumped up. So now we've taken out this liquidity. So we're also at a level. And then I'm just looking, okay, where are we going to then line up with? So we have equities, pumps up, beginning of a new 15-minute candle. So let's drag this over here. New 15-minute candle. Oopsie daisies. There we go. 15-minute candle opens. Let's zoom in so we can see. So equities opens, pumps up, and then boom, break structure. So big fat engulfing. Once we get a big engulfing like that, I tend to wait for price to pull back somewhat. Again, you can just enter straight away here. As Stacey says, just fighting for the best price. If it's a big fat candle, I will wait for price to pull back a little bit. If it's not a huge candle, a big shift candle, then I'll just enter on the break of structure as long as it's in the new 15-minute candle. So yeah, as price pulled back, entered here, and then just took. So you measure the last pump up. So for me, this is the last push up. So you measure this candle's high, this candle's low, and then I just took 100, 200% expansion. Lovely. So again, it's simple rules. We're looking for coil volume or price to move aggressively at or into a level at the beginning of a new 15-minute candle. That's everything that we're looking for. So let's go through another one. So then the next trade was, that's what we just went through. Gold. Okay, so this is an example of the price moving aggressively to a level. So price moved aggressively into this area. Here we have the level here, and then you can see here, this is the beginning of a new 15-minute candle. Open up and we break structure. So we broke structure up to 2 minutes just before the candle opened. As the candle opens then, entered, and I measured this range here. So the last push down before the break of structure. So this candle's low to high, and I just took a 100% expansion. Again, Stacey uses the time, so I could have held for this 15-minute expansion, but I'm super happy trading this mechanically and just being in and out of the market, no subjectivity, etc. Next one then, oh yeah, this was a beauty. This is over in literally, I think, 2-3 minutes. And again, super simple. So we have our levels. So okay, so as we're coming into the session, we're thinking, okay, which are our levels? We have our double zeros smack bang in the middle. That's no good. Then we have previous days highs and lows. That's down here, so that's potential, and previous session highs and lows. We don't know which one of them is going to be the target, or is going to be where we get the reaction from. So we just have to wait and see, okay, where do we get coil volume at the beginning of a new 15-minute candle? Here you can see price goes down, breaches out of the liquidity, the new 15-minute candle, and then breaks structure. Boom, I'm in this trade, and yeah, I was out literally, I think, within 2 minutes. Super, like genuinely just like, I just couldn't believe it. This trade, what's this one? Okay, yeah, so here's a good example of not every single time it will go. So here we have US 30. So we come down 7 minutes into the candle. Okay, yeah, so you can see here now. I'm gathering data on seeing, because if each 15-minute candle is a cycle, massively it's increased my win rate by staying, as I mentioned, staying in around the 2 minute plus or minus mark from the open of a new 15-minute candle. Another pattern exists where you can trade 7 minutes into the candle. So again, like the halfway point. So price will go down for the first 7 minutes and then up for the next 7 minutes. Don't have much data on it. Was experimenting with it on this trade. Took some profit. Took some profit, but again, it doesn't have the explosiveness of the new 15-minute candle. As we failed to breach this high, I just ended up closing here as we consolidated, because again, we're at a level consolidating. I don't want to be in that trade anymore. Then same session, so this was the initial trade. So we consolidated here, 7 minutes in, took this trade up, and then as we coiled, I closed. Now we have a new level here. Price comes down. This is the beginning of a new 15-minute candle. So this is a inner range liquidity. This isn't an extreme, etc. But we're at a level, so we've come down aggressively to a level. So we've taken out inner range liquidity. And then at the beginning, so here's our structure point. At the beginning of a new 15-minute candle, we break structure. Oh my god, yeah, this trade, it was some day in the States 2 weeks ago, and yeah, the markets closed. The US 30 markets closed. Its price was literally here, and then I forgot about the trade and opened back up, and we were up here, and it was just again. I won't say this was stress free because I genuinely thought that I'd have to wait for 24 hours for the markets to open again. But yeah, I just opened up to profit, so that was very nice. This one almost made me cry. Telling the truth, this was the most difficult. So where are we? So we went through these trades here. So shorted level 3 here. We had the explosive buy, US 30 trades, and now we're here on EU. So yeah, this trade, I haven't had an emotional day like that or like this in a very long while. And yeah, it's genuinely one of those days that proper stand out to me in terms of emotions, because losing a trade is one thing. I have a mechanical system now, so I don't associate myself with the losses as much as I can. Of course, we still do it, but I used to just completely just think, if I win a trade, I win. If I lose a trade, I lose. Now, that's not so much, but this one hurt me so much because I broke my rules by going to break even. So I don't have a break even rule. And this was the same day and the same time I had entered the US 30 trade. And I remember I was in this trade for ages, consolidated, kind of drained my energy a little bit. This one, then the market closed, and my emotions were just a little bit high, and I feckin' went to break even. And yeah, this would have been my biggest trade, both financially and risk reward. It ended up being an 18-1. And yeah, and I broke even and then got taken out here. But anyways, I'll talk you through why I entered it. And again, it's the exact same principles as all of this stuff. So, like we mentioned, once we have a range, we'll then have a peak formation high and a peak formation low the price will trade into. So you call it the range extreme peak formations. So when we're getting ready to expand, price will trade into both of these peak formations, sit present and observe the 15-minute bars after liquidity sweeps. So already having this marked out, and then price comes down here, beginning of a new hour, inner range liquidity sweeps, and we get the 1 minute break of structure. Had a super, super tight stop, and then again, just measuring the range expansion. This is a better view of it. Oops, no, it's not. But again, before, you see random supply and demand, people hitting these crazy risk rewards, and I was kind of against high risk reward because the way that I got profitable was completely eradicating risk reward and literally just going, okay, can I hit a 1-to-1, hitting them consistently, moving up to 1.2, 1.5. And for a couple of months, I genuinely just traded 1-to-1s, 1-to-1.5s. My average risk reward for a 4-month period was 1-to-1.6. And yeah, and I was profitable every single month doing that. And then I realized, okay, I'm now able to actually hold my trades. I'm now actually convinced myself that I'm a profitable trader because I've got some months under my belt. Every single month, even with losses, I know that I can just execute the system and finish profitable. Then I realized, okay, risk reward isn't everything, but let me try and use these concepts that I have been learning from Stacey. And yeah, and it's just been incredible seeing the risk rewards that really are possible, like hitting 10-to-1s and it not being a fluke, it genuinely being, okay, we broke structure on this 1 minute candle. So this candle, this is my, it's a 1 bar stop, as Stacey says, this candle is my stop loss. The timing for me makes that. It's not like, okay, we just broke out of this liquidity here. So for instance, you could enter there, but then that doesn't have the 15-minute candle being there, the fact that the breakup structure happens at the beginning of the new 15-minute candle, that gives us the information that, okay, this candle will either hold or it won't hold. So then these high risk rewards become possible, because it's like, okay, I'm not just entering off of a random 1 minute breakup structure and putting my candle on this random 1 minute. It's this candle has come down to this level at the beginning of this next 15-minute candle. At the switchovers of the candles is where the direction switches. So now, if we're going to switch direction, I'm either right or I'm wrong. So if it's going to switch now, it'll make the move now, because they've already done the dirty work. They've already liquidated. Now we've broken structure. So if I am right, if this move is to reverse now, it's going to happen, or it's going to happen now. Let's say, I've explained it so badly, but basically the whole thing of the time compression that Stacey talks about, it's so important, and that's the reason that we can use 1 bar stops. And again, I'm not advocating for trying to hit crazy risk rewards. Like, you could generally just put your stop loss down here and trade less stressfully. And again, if I had done that, I wouldn't have gone to break even, and I actually would have hit this, and this wouldn't be freaking zero. But yeah, beautiful stuff. And then again, the next day. So this, as I said, beat me up so much, I didn't even trade the next day. And look, again, another beautiful, oopsie daisies, beautiful setup the next day. Again, super simple. So this was the trade here. Then next day, so we create a range, high and a low. We have double zeros here. Price comes down aggressively to double zeros. Coil volume at the liquidity. That's here. Shift in the new hour. So again, yeah. So here we come down at double zeros, have the 1 minute break of structure, type 3 shift. Excuse me. At the 15-minute candle. Then price has the move, and then we see coil volume at the liquidity. So this is the previous liquidity level here at the beginning of a new hour. Boom. Here's a zoomed in version of, whoopsie daisies. Yeah, here's a zoomed in version of the next day trade. So here's 9:45. So we come down aggressively. We have the dump. We start to coil. New 15-minute candle. Here's structure point. Break structure. Boom. You're in the market. Last push down. So measure from the low to the high. And you can take either 1, 2, or 300% expansion. Lovely stuff. And then here, this is horrendous. So still managed to finish the month super strong, even after this horrendous loss. So my biggest loss in months. And yeah, I was traveling all week, came back yesterday night, and this is crazy. So look, this was today's trading session. This happened today. So I said, we're on day 4, near the high of the week. If we get a false break, I will look to take this short. So you can see here, day 1, day 2, day 3. So day 4 becomes day 2. And then I'm waiting for day 3 to break out of this high and take it short. High of the week, super strong level. And so I had this level marked out. And so we had the break. So you can see. This is the DXY. We push down, and so we have structure point here, pin down, the New York session opens, send traders short, and then break of structure, boom. Perfect type 3 shift. Same on EU. Have the high of the week here, pierce out, first minute goes up, and then we break structure. Structure points here, boom. Again, I told myself I wasn't going to trade this day because I've been away all week, and then I also saw that DXY. So in my mind, I wasn't trading. Again, this is irrelevant to the whole video, but I'll tell you a little story. just about the emotions of trading. DXY didn't actually liquidate this level here. So again, the concepts are simple, but there's always variability in the markets. So we had this liquidity level, and I thought, okay, DXY came so close, touched double zeros, didn't actually liquidate that. So I thought, okay, this will come back to liquidate that, and then we'll get a move later on in the session. So I was waiting I'd marked this out and said, I would love price to come back up to this area so I can hit it short. And for whatever reason, I said, okay, the XY hasn't hit that. I'm going to trade this stop on back up to the high. Not my strategy whatsoever. Literally zero part of my strategy. My strategy from the beginning was to wait for break outside this level high and take it short. And yeah, literally entered this trade, and before I could put in my stop loss, boom. So I ended up losing 3% in a couple of minutes. And yeah, it was just a grand finale to this month. But yeah, this, like, I actually was genuinely just smiling because of how perfect this move actually was. And then I added it to my playbook. So this move, I was happy that I got steamrolled in a way, because it just goes to show the power of, so then I marked this out to add to my playbook, that this was the perfect trade. And the fact that I got steamrolled so much is because this market, once we've taken the liquidity, once we've had the level, this will move fast and hard. So it was genuinely just absurd to be trying to buy back up into this area, because the whole purpose of the reason that we trade like this is because once it goes, it goes. So I just want to cover one last thing, and it's how to actually study these concepts. So for me, we can see here, beautiful. So 3 pushes up, new hour begins, boom, break structure. So yeah, on another day where I was on form and planning to trade, this would have been hit. So I guess that's kind of why I was just smiling so much. Like, once you see it, you don't unsee it. Like, this was such an obvious trade, and they happen, I don't want to say every day, because that's not a good way to look at it, but it happens at least, like, I'm just going to use 3 times a week, let's say, like 2-3 times a week. This will print, and it'll just be painfully obvious what is happening right now. And it's just trading at the extremes. So last thing I want to cover is then how to actually, so first of all, gather your data and actually just see, okay, what am I doing well? What are my best sessions? What are my best pairs, days of the week, etc.? This is all useful to build up, but the main thing that we want to do is actually have our playbook. So actually be able to see, okay, these are my wins, these are my losses, and then a step on from that, okay, what are the actual ideal trades? So then being able to go in and study the textbook ones. And for me, these questions are what make, like, we can study stuff, yes, but unless we're asking ourselves the right questions, like, there's no point in just keep building up lessons and lessons and lessons and lessons. We want a select few of trades that we can actually go in, look at, and then just ask ourselves this at least once a day. Just go in and find, okay, what's the perfect trade based on, or let's say, like, if Stacey was to mark out one of these trades, which would it be? And then just go in and dissect, okay, what was the optimal trade management for this trade? Where could I have added size responsibly? What did yesterday do that made this trade identifiable? And then what geometry did previous sessions set up before that made this trade an A-star setup? For me, those 4 questions are all that we need to ask ourselves. So how can we manage this? This is the most important one. Where could I have added size responsibly? And then just studying, okay, what did yesterday do and what did the previous day do? This is just getting us used to, okay, what does price look like before our trade sets up? And then we can then just study the previous day and the next day. So that means that if every day we pick out one ideal trade setup, we ask ourselves, how can we manage this? Where can we add size? what did it look like before that, and what did it look like after that. Success is inevitable. Like if we're genuinely doing that, if we're recording our data and then asking ourselves this every single day, we're just looking at this every day, and then we're sitting in the present state, it just becomes, our success just becomes inevitable. And maybe we can just use a different word from success. Like being able to execute this becomes inevitable because we've simplified it down to bare bones, down to our bias from the day count, which levels we're looking for our entries at, then our entries at the beginnings of a 50-minute candle. And again, the last piece of the puzzle is just the presence. It's just sitting there in a present state, not stressed about money, not thinking, where's it going to go? Where's it going to go? Like that for me was always the issue. I was coming to the charts and trying to figure out, okay, where is price going today? And that was my downfall. It was to my detriment that I was trying to figure out where price was going. And I could conceptually understand that we just, like I always heard Stacey say, okay, just wait and see what prints. But I was so, like I said, literally just like a crackhead, eager to trade, that I would never actually let price print, let price go to the level, and then just wait for that beautiful cold volume or that aggressive move to the level, and then the 1 minute break of structure on the new 15-minute candle. And it would happen in the session, but I would have already entered 2 or 3 times and just been fucked. And yeah, just ruined emotionally and financially. And yeah, that just kept happening over and over again. And yeah, the whole thing for me is just sitting in a present state and just really just being patient, like not trying to figure out where's price going to go, just having the levels marked. So all these levels marked out, and then just seeing, does price do this at any of those levels? If it does, hit it. Measured rating expansion, take profit, and yeah. All right, guys, I'm going to wrap this up now. I don't even no idea how long I've been rambling on for, but yeah, this is really how I've been able to take Stacey's concepts, and this is what I'm focusing on, I guess, from everything that Sensei teaches. All right, guys, I hope this helped. Have an amazing week in the markets. Or as Stacey says, may the markets be with you.